Russia has officially invaded Ukraine. On Wednesday, explosions could be heard in several cities, including the Ukrainian capital city of Kyiv. We are taking a look at the city right now. President Biden is expected to announce harsher sanctions for Russia after meeting with other world leaders to discuss the response. And right now, the stock market in the U.S. is open. The Dow Jones, as you can see, is down over 800 points right now. It was expected overnight that the stock market would open way down. Economic impact already being felt. The Dow opened nearly 800 points down, has continued to drop. The Nasdaq also took a hit. They opened about 250 points down. The invasion of Ukraine is going to have far-reaching impacts when it comes to the U.S. stock market and the economy. Here to talk about that is local stockbroker Bruce Allen of Bruce G. Allen Investments. Bruce, good morning.
Good morning, Gary.
So the stock market opened a short time ago, not doing very well right now. It's a reaction to what happened overnight. So talk about how you think the markets will go now.
Well, I think that the first thing is let's take a look at also, and you just mentioned very aptly what's going down. I think important thing is to look at what's going up, because this is what people are concerned about. The first thing is that, as you mentioned earlier, crude oil is up almost $7 a barrel and briefly pierced $100 a barrel here in the United States. That's likely to have an impact on prices at the pump, and people are concerned about that. Number two, we've seen gold prices rising about $45 a barrel. Our dollar is rising all over the world right now. People are flooding into dollars and dollar assets, and that means that also that treasury bonds are rising and yields are falling. So I think the key thing more than anything else, Gary, is that what people are worried about right now is making sure that they put more money into safe havens or places where they can have protection for their finances.
What do you suggest to people now that this is looks like it's going to go on for a while? Do they hold their own and wait for it to come back up, or should they move some of that money to bonds?
Yeah, I think the key thing really is that before we go into a crisis like this, we want to make sure, and each client is different, but everybody, we want to make sure that we have make sure that we have this safe money tucked away in bonds. Number two, we want to make sure that we've got inflation hedges in place. And as you can see, right now, the biggest risk to portfolios is inflation, and the biggest risk to the economy is inflation, Gary, because prices are rising not only in the oil markets, but also, as you mentioned earlier in the broadcast, in the food markets as well.
Yeah, I was going to ask you about that. So the president expected to announce more sanctions today against Russia. Unfortunately, that hurts Russia, but it also could hurt people in this country, too, with oil prices and that sort of thing, right?
Yeah, I think that the big impact will be likely that, that Russia's a major energy producer, and unfortunately the Europeans have elected to get significant supplies from Russia. I think the opportunity is, over time, if we really impose strict sanctions and do not let this go unpunished, then the opportunity is that we could potentially see Europeans renew and alter their supply chain so that we could potentially be supplying them with more energy and other OPEC nations outside of Russia. But right now, the leverage Putin has over Europe, and that's the big leverage he has, is that he supplies them with a lot of energy. And unfortunately, the Europeans have let that unfold. If that can shift where we can supply more energy to the Europeans, that would be a phenomenal development. The big impact on America is how this will impact inflation. So number one, inflation is the biggest risk we have in this economic recovery, and how rapidly is the Federal Reserve going to respond to attack that force. And if we see the inflation numbers come in significantly higher than they've been over the last couple of months, we will see faster interest rate rises. And that's probably the biggest risk to the economy. So number one, how do we tackle the inflation risk? And number two, is that going to derail the economic growth? And it's up to the Federal Reserve to figure out how do they manage that as we go forward.
Yeah, that doesn't sound like a good time coming up. All right.
Not at all.
As always, we appreciate it. Thank you very much, and we'll talk to you again.
Take care.